Hello guys, so today we'll be going into a detailed explanation of what the financial market is. Today we'll be discussing understanding the financial market. But first you want to ask yourself, what is the financial market? Financial market is a global system where people buy and sell assets like currencies, stock, crypto, commodities and more. Just like your regular market where people go to buy things, exchange money to collect goods. That's how the financial market works. Like for example, for those who have traveled before, when you go to the airport, there's a point at which you exchange money. So for example, if somebody from the US is traveling to Japan, and on arriving in Japan, the person has US dollars, but he wants to change that US dollars to Japan yen, so he'll be able to purchase things in Japan. So for example, they say one USD at that time is equals to one Japanese yen. I'm just giving an example. So that person gives out one US dollar and collects one Japanese yen. But on their way coming back, the person came and they said one US dollar is now equals to $1 is now equals to about 1,500 Japanese yen. You understand? So at this point now, the person has made about 500 in profit already. So you will now say this person has engaged in a financial market and has made money. But if it's on coming back, they say the US dollar is now 800 Japanese yen, you know the person has lost money. So that's how the financial market works also. People look to buy when things are going, they used to look to buy when the price is low and sell it when the price has look to buy when the price is low and sell it when the price has gone higher. That's how the financial market works, and that's how people get to get their own share from the financial market. So what is the purpose of the financial market? The financial market helps business and governments to raise money. It also allows investors and traders to earn profits, traders like you and I, and it facilitates global trade and economic growth, because the financial market doesn't only deal with individuals, it deals with businesses, deals with governments, deals with even countries. People, there are a lot of people that go into the financial market. So how does the financial market work? Buyers and sellers interact through platforms, broker and exchange. A broker is the person who is the middleman between the market and the person who is trying to reach the financial market. They help you execute your trades. They are the middleman who facilitates execution of your trades in the market. So we also price is determined by supply and demand. This is where we look to understand this very well. Price is determined by supply or demand. So how does supply or demand affect price? Look at it. When for example, something has a company is producing socks. Yes, a company is producing socks. If many people are willing to buy these socks, that company will definitely increase the price of the socks. That's demand has made the price of that socks to increase. But if the company is creating more socks than people are willing to buy, then they will have to reduce the price of that socks so that it will attract people to buying it. So that's how the market works. When there are many people buying a particular currency or rushing for a particular currency, the price tends to increase. And when there are less people going for that particular currency, the currency drops to attract people to it. So that's exactly how the financial market works. So next we'll be moving into types of financial market. We have types of financial market. You go to the financial market, there are different aspects of the financial market you can invest in. There are different types of the financial market you can trade in. So number one, we'll be going with Forex market, which is completely known as the foreign exchange market. It's the largest market in the world. I've already I said this earlier in my previous video. It's the largest market in the world. It moves over $6 trillion each and every day. Each and every day it moves over $6 trillion. This is a market where you find a lot of people, and then trades currency pairs like Euro USD, GBP USD, Euro GBP, and so on. Those are the kind of currencies that are traded in the forex market. And forex market is open for 24/5. That's from Mondays to Fridays only. It is highly liquid, as there are many people in the forex market. It's ideal for day traders and for scalpers. We'll discuss this as we go on in this series. So going down, we also have the stock market. This stock market, they trade shares of companies like Apple, Tesla, Amazon. That is what basically is done in the stock market, buying of shares with companies. And these shares are bought based on the company performance and economic news. When you see a company's performance increasing, people tend to buy from those companies, or when they see it dropping, something like that. That's how the stock market works. It is basically with trading of shares of companies. Okay, and this stock market is open from Mondays to Fridays, and it is long-term investment friendly. Yes, you can trade for a long period of time. It's long-term investment friendly. So we also go down to the cryptocurrency market. Cryptocurrency market. Okay, these decentralized digital currencies like Bitcoin, Ethereum, Solana. These are the kind of things that are traded in the cryptocurrency market. And the cryptocurrency market trades for 24/7. That's every day of the week. It trades throughout the week. You can go to the market throughout the week, trade Mondays, Tuesday, Wednesday, Thursdays, Fridays, Saturday, Sunday. You can trade at any time. And this market is highly volatile. When I say it's highly volatile, it means it moves at a very, very fast pace. You can see it go up very so high and come down so high. It moves quickly. So the market is very, very volatile. The crypto market is very, very, very volatile. Okay, we also go down to commodities market. This has to do with trading physical goods like gold, oil, silver, etc. Heavily affected by economic events and global news. That's what happens in the economy highly affects the movement of these commodities, and used as hedge during inflation and uncertainty. During inflation, increase in price of goods is what is used. So gold is highly affected by economic events. Oil, silver, and they are all traded in the commodity market. We also go down to indices and futures market. Trades basket like US 30, also known as Dow Jones, Nasdaq, reflects performance of large economic sectors. When you US 30 has to do with a certain economic sector and their performance. That's what affects US 30 and Nasdaq, which fall under indices and futures market. Often used by institutional traders, as they are used by all these big institutions. Those are the people who usually trade such things in the market. So understanding where you are trading is the first step to understanding how to trade it. So you have to take note that this is what I'm trading in market. You can't just jump into the market today and say I'll go for US 30, tomorrow I'll go for Euro USD, next tomorrow I'll go for gold. No, you have to have certain things you trade in the market. Study them and understand them firmly to be able to succeed in the market. The more you approach, the more you study them, the more you get to understand their movements and their price action. But jumping from one pair to another just makes you end up not understanding anything. So understanding where you are trading is the first step to understanding how to trade it. So how can you trade? How can you trade in this different markets? So in the forex market, or what can you trade rather? In the forex market, you trade currency like I said, Euro USD, GBP USD, USD JPY, Euro CAD, GBP, Euro GBP, GBP JPY. Those are the kind of currencies that are traded in the forex market. And forex market focuses on the strength between two economies. That's, you are focusing on the strength of two economies. For example, Euro has to do with an economy of a particular country, USD has to do with an economy of a particular country. So if Euro goes down and USD goes up, that's where you know that this particular economy has gone higher than a certain economy. So for example, you have Euro USD. If I say I'm going to take a buy on Euro USD, I'm going to go bearish on I'm going to go bullish or on Euro USD. I'm trying to tell you that I'm predicting that Euro USD is going to increase in price. Euro will increase in price while USD will drop in price. But if I'm taking a sell, then it means I'm telling you Euro will drop in price while USD will increase in price. And same applies for GBP USD, USD JPY, and so on. Most liquid and most traded globally. Like I said, Forex is the most liquid market. It has many people who trade it, and it is the market that is traded most globally. Then going down to cryptocurrency, digital currencies like Bitcoin, Ethereum, Solana, those are the kind of things that are traded here. Those are the kind of things you can trade when you find yourself in the cryptocurrency market. And it is very, very volatile. High risk, high reward. Very, very volatile. That is can move really, 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 really fast. Then it is traded 24/7, like I said. Then coming down to the stock, it's just buying shares like Apple, Amazon, Tesla, influenced by company performance. Always note this, influenced by company performance. Any instant news, long-term and short-term potential can be used for both. Then coming down to commodities, gold, silver, oil, natural gas, often used as safe haven asset, affects global events, wars, inflation, like I said earlier. Then indices, market basket like US Jones, S&P 500, NAS 100, NASDAQ represent entire economies or sectors, trades with strong technical and news impact. So what you have to do is find an asset that fits your strategy, study its behavior and master it. Don't jump from asset to asset. It doesn't work that way. You find a setting. If you want to get like 3 or 2 or 4 or even one pair that you are good at, you study it and you understand the behavior well, and you'll be able to trade the financial market perfectly. So who are the market participants? Is another question you ask yourself. So who are the market participants? Market participants, you look at the central bank and government. They control monetary policy, e.g. interest rate, inflation control. These are one of the big boys in the financial market. Their decision impacts entire economies, and move currency markets heavily. And these examples of these central banks, Federal Reserve, which is in the US, ECB, which is in Europe, and Central Bank of Nigeria, which is in Nigeria, their decisions affect the economy of their countries like a lot. Their decisions affect the economies of their country a lot. And then institutional traders, banks, hedge funds, investment firms, they move large volume of money. These people, this uh, these are the people that influence the market movement a lot. Institutional traders, because they move the highest volume of money in the market. They move very large volume of money in the market, so they influence the market movement the most. Their analysis and trades influence price movement the most. They are the big boys of the market, institutional traders. Then who are the market participants? Retailers, traders, those are people like you and I, individuals using their phones, their PCs to trade the financial market. Smaller volume but growing in number. That's, we are not much, but we are growing in number compared to other participants. Can succeed with the right knowledge and mindset. You don't have to be part of institutional traders. You don't have to be part of the central banks and all that to succeed in the financial market. Even as a retailer trader, you can succeed, and there are people who have succeeded like that. You just have to have the right mind and the right knowledge. So we also have corporations, business that imports and exports goods. They trade currencies to hedge against currency fluctuation. For example, a Nigerian company buying from China needs USD or yen to complete that purchase. So there will basically be a market, basically be a trade of currencies between those corporations. So corporations are also a body that participates in the market. So we also have market makers. They provide liquidity by constantly buying and selling. They help ensure you can always enter or exit the market. They help you, they ensure that you can get to the market when you want to and go out when you feel like. Sometimes manipulate price in low volume zones. They manipulate price in low volume zones. So coming down to here, you now ask yourself what moves price. Actually, what makes those candlesticks to go up, come down? What makes those numbers to change? What makes the market to fluctuate? The market doesn't just go in straight line. What makes it to go up, come down, go up? That's when you begin to ask yourself. Demand and supply. That's just what is behind that. So under demand, when more people want to buy and sell, like I explained earlier, the market begins to go up. That's for example, people, there are more buyers in the market now than sellers. You begin to see the market push up, push up, push up. Price moves up to match the demand. Price moves up basically to match the demand. Seeing in charts a strong bullish movement. Like I said, when you say something is bullish, it means you are referring to an upward movement in the market or breakout. Examples: news that boost investors' confidence in a currency, buying such. Then coming down to supply, when more people want to sell, when more people want to go bearish. Bullish is for buying, bearish is for selling. When people want to go bearish, price drops to attract buyers. So what basically moves the market in an up and down trend is demand and supply. Then why this matters for traders: zones of high supply or demand act as support and resistance. For those who trade the financial market, there are zones you mark out as places where market